this activity, we're going to close all of the temporary accounts, and we're going to keep open all of the permanent accounts. Let's take a look at our night zone ledger. This is from a previous activity. We can see some permanent accounts such as cash, office supplies, office furniture, loan payable, account payable, office equipment, shelving, accounts receivable, capital. These are permanent accounts. We need to keep these balances ongoing. At the end of the accounting period, we need to close all of the temporary accounts. Temporary accounts are usually income statement items, but we also have drawings as well. So if I take a look, we have service revenue, drawings, and advertising expense. We're going to close them to a new account called income summary. We'll make it on September 13th. And we need to we'll first close the revenue. The first step is always to close the revenue. And we need to make the balance 0. So it's got a balance of 450 right now, so we need to debit the revenue 450 to give that a balance, a 0 balance. If we've debited revenue, we therefore have to credit income summary. And there we have it. The next is to close all the expense accounts. So we have just one in this example, which makes it easier. We need to credit all of the expenses. So we'll credit advertising expense. And because of debit credit theory, we're going to therefore debit income summary. Income summary, as we've mentioned in this activity, is a holding account. Now the next step is to close drawings. Drawings has a debit balance usually, and so therefore we need to credit it to make it a 0 balance. And if we've credited it, we need to debit income summary. Now income summary has a balance of $300. We need to close income summary, and we will close it into owner's equity. So to close it, let's get that balance to 0, excuse me. There it is. And on September 13th, we will close it. So we will debit. Our debits equal our credits. Alright, so our owner's equity has increased. Now we need to make sure that we put it into a trial balance. And we're actually going to double click down here. And we will call it a post-closing trial balance. We've got that title here. All of the permanent accounts remain the same. Capital has changed, and they're no longer a balance with revenue, expenses, or drawings. So we're going to delete it. Alright, so we need to put in the new capital. And the new capital, if we go back and take a look, was 2,050. And if we put that in on the credit side, there we have it, 3,050. I'm going to right-click, click Format Cells, and we're going to give a nice little double underline border. Now we're correct. I do have accounts receivable and accounts payable here. They are permanent accounts, but they have 0 balances. It is up to you if you would like to leave them on or take them off, as they make no difference to the accuracy of your post-closing trial balance. In this activity, we're going to close all of the